Hi everyone. Today we are going to discuss the advantages and disadvantages of long-term investment. As we know, long-term investment always give good return. There are many investors are long-term investors, but at the same time there are many retail investors who invest for long-term are suffering. So here we are going to discuss how we have to manage our long-term portfolio. When you plan to invest, if you are choosing a share and you're a long-term investor, then how you should manage that portfolio, what you should do and what you should not do. There is nothing called long-term investment in the sense like you invest on a share and then you sleep for 3 4 years, because most of the analysts say long-term investment is 5 years or 6 years and even 10 years. So it doesn't mean that you have to invest and you just sleep for 10 years, then you wake up the 11th year and check what happened to your investment. Most of the time you will be surprised, because stock market is not stable. It is full of uncertainties. Any news can come and spoil all your investment and profit. So what we should do? Let's go through this video. And from my experience, I'm investing in the stock market for more than 20 years. So what I have seen and what I have learned from the market, this is from the real experience. I'm sharing it with you. So if you wish to take some lessons from that and plan your investment, I would be very happy. So normally it is always safe to always go long, with fundamentally strong companies or Nifty 50 companies. We can call it as large cap companies or blue chip companies, etc. Let's say if you had invested on Nifty 50 companies in 2008, when we had financial crisis all over the world. So even Indian market went through deep correction. Those who invested in 2008 on Nifty 50 companies, by now you'd have made a handsome return, not a handsome, huge return. Because Nifty point was, what was the point in 2008? Just go and see. And what is the current point? So all those companies grew, or it was under severe correction in 2008. I'm not using the word growth, but even all the companies, like what happened in COVID time. Reliance was trading at, I think, 885 or 685 levels. In 3 months, it reached to 2400 levels. So see the difference and what return people made on such shares. So long-term investment in the sense like you have to invest in the right time and you have to monitor the share, then you have to react in time. So in that sense, long-term investment on such companies are always better than small, mid-cap and other risky companies. But there are exceptions. There are exceptions everywhere. Doesn't mean that you can just blindly invest on companies and stay long term. There are uncertainties everywhere, especially in stock market. So I would like to bring your attention to two companies. These are two classic examples of long-term investment. Here you can see what happened to the long-term investors, especially those who have invested 10 years back and those who have bought this share 3 years back, 2 years back and even 1 year back. And what happened to these investors, those who have invested 10 years back, 3 years back and 1 year back? What happened to these investors? I'm giving some details of the first company, that is Tata Motors. Then you can do your own analysis by checking the prices for the last 10 years of ITC, that is the second one. So here we are taking Tata Motors as an example. Then after watching this video, you can go and see what happened to ITC. It is not in the same nature, but see the difference. Tata Motors is a classic example of real long-term stock investment. You can see the challenges and struggle this share went through all these years, especially last 10 years. You can experience the anxiety, stress, frustration, relief, happiness, and joy. After 10 years, everything in Tata Motors 10-year journey. You can go to money control or some other site and you can get 10 years data of Tata Motors, and you will find that if you are an investor, if you had invested 10 years back, uh, what would be your situation during this journey. So here let's go to the key fundamental points only. I'm not going to discuss, and we don't have to discuss all the financial ratios and financial explanation, the details of this company, which is really boring, and nobody would be interested in listening such details. So let's go through the key details, the fundamental details of this company, just to create an awareness, how we have to manage our long-term investment ourselves without following the analysts blindly. Most of the time, analysts recommend a share when it is going up because today if they say that this share is good, the second day that at least that share should reach minimum 1% or 2%. I'm not saying that all the analysts are like this, but I'm watching, CNBC, all the other money control, all most of the analysts, they recommend a share when technically the share is ready to go up. This is what for them stock recommendation. But if you are a retail investor and if you are looking for long term, if you don't enter at the right time at the right price, you are not going to make any profit. You will waste your time and money. By the time this analyst recommend a share, the share might have reached its 52 weeks high. They say yes, the share is flying, go along with it. But what happens if for any reason, any unforeseen reason, if market falls, the share will go through a deep correction, then it will take time to recover. And why we have to invest when a share is at 52 weeks high for long term and suffer for 2-3 years? They will say, okay, hold it and it will come back. But why we should do it? We don't have to keep our money as dead deposit. Instead, we can invest on some other share and make money. So let's see what happened to Tata Motors, and you decide how you have to manage your long-term goals and your long-term portfolio. So let's see the chart of Tata Motors here. This chart is from April 2023 to July 2023, and see the growth. It's a fantastic growth from 482 to 662. We can say it is almost double the money. It seems everybody knew that Tata Motors would reach 670 levels or more. So there was continuous investment from retail, DIS, FIS, mutual funds and all. So this is one chart. You have seen it. This is from April 2023 to July 2023. See here, you don't have to invest for 10 years. You invest from April 2023 and you wait till July, April, May, June, July, 4 months. Then your investment is almost double. I'm not saying double, but it is almost double. Now, let's see the result of Tata Motors. I'm not going to discuss September, December, March results. Just comparing, because we are discussing current status of Tata Motors. So I'm comparing only June 2022 with June 2023. June 2022 Tata Motors sales, quarterly sales was 14,874.44 crore, and in June 2023 it has become 15,832.57 crore, 1000 crore increase, and operating profit was 602.76 in June 2022, which has become 1278.33 crore in June 2023. So the result is amazing. Tata Motors was struggling all these 10 years. Their result was negative all these years. And now last 2 quarters they are declaring positive results. And with their EV sales and all, everybody is expecting a bright future. But see, even in 2008, everybody was expecting bright future when the share price was 600 rupees. But what happened after that, this is what I said earlier, that there are unforeseen circumstances, unforeseen situation comes, and sometimes you will have to suffer. Now let's go through the dividend history of Tata Motors. This is from 2000 to 2023. So in 2000 they declared 25% dividend. Then 3 years or 2 years there was no dividend. In 2003 they declared 40%. Then 2004 two times they declared dividend, 40% each. Then 2005, 6, 7, 8, 9, 10, 11, 12, 13, 14. Continuously they paid dividend, and it is, you can see it here, 21, 20, 130, 150, 200%. But from 2016 to 2023 there is no dividend. There was no dividend. Why? Because their result was negative. They went through a lot of changes and struggles. Now let's see the shareholding pattern. We are comparing September 2022 with June 2023. Promoters holding, it is same 46%. FIS increased from 14% to 17%. DIS from 14% to 17%. Mutual fund 6.5 to 8.69. So here you can see the difference. Now people, they trust Tata Motors, and the DIS and FIS, they expect very good results in the upcoming period, quarters. So they started investing and the share price started moving up. Now look at the returns. This is their return, 5-year return history. Just forget 1 day, 1 week, 1 month and all. Let's take from 1 year, 3 year and 5 year. In 1 year, Tata Motors gave 31.16% return. 3 years, 451.82% return. Where you would get this kind of return, especially from a large cap, a large blue chip company like Tata Motors, gave 451.82% return in 3 years. But why then 5-year return is only 137.96%? See, here we are going to see the most interesting part of this video and the main point. If you are a long-term investment, many analysts say 3 years is short term and 10 years or 5 years is long term. Then what happened to the long-term investor? 5 years 136.96 and 3 years 451.82. It was better that you don't have to invest for long term, you go for short term. See here, there is no short term, there is no long term, there is no swing. Always you look at the company, its fundamentals, its current share value, at what rate it will increase, and what are the news, positive news, or what are the negative news. Then you invest and you take a decent return, you prepare your plan and you just get out of the company. Even Tata Motors. Now we will go and see what happened to 10 years return. Ten-year return is 0. See here the chart that shows Tata Motors from 2000 to 2023 July. Here you can see highlighted here 1st January 2015, Tata Motors was at 607 rupees share value. So if you are a long-term investor and you had invested on Tata Motors in 2015 January and you spent 607.4 rupees per share, then what happened in 2021? It came to, I think it is 65 rupees during COVID time. So here, see the frustration and your anxiety and your stress. You are a long-term investor. After 5 years or after 6 years, your investment has become what? From 600 to 65. Here, you have to blame yourself. We cannot blame anyone. We cannot blame the analyst. They recommend the share after they just disappear from the screen. It is your job to go and analyze, watch, monitor, and then take decision accordingly. Then from 2021 it started picking, and see the chart here. In 2023 July it came back to 660 rupees. What was the price 10 years back? So those who are invested 10 years back, now the price reached their cost price. What is the return? If you had invested 10 lakh rupees or 50 lakhs rupees on Tata Motors, it was better than you could have made more interest if your investment was in fixed deposit. See, that is why I chose Tata Motors as a classic example, because here you can see, even if you have a long-term investment, you have to switch, you have to change, you have to withdraw, and you have to react. I am using the word react, means whether you transfer this deposit to another share or you withdraw and keep money with you. Whatever, you can do many things, but we have to react. We have to react in the sense like we should not just sleep, okay, I'm a long-term investor, so I will not withdraw money. No. You have to withdraw your money and you have to put it in a bank fixed deposit or another share which has potential, another company which has potential to grow in short term. But it doesn't mean, I'm not asking you to jump here and there, no. But if there is a valid reason, this is why I said you have to analyze, you have to understand, you have to understand the reason why this share is falling. Then you have to react. The stock went through a deep correction and tried to come back, but failed. Finally, after 10 years, it reached almost the same value. What was the value in 2015? So those who have entered 3 years back and 2 years made very handsome profit, even 1 year. But those who have entered 10 years back, a real long-term investor, is suffering. So it is a lesson. You should never keep your investment, as dead investment. Monitor the share price regularly and prepare your plan after doing your analysis. If it will take very long time to recover, it is better to book that loss and put it in another share, but make sure if there is loss, and if you are going to average it, check if that when you are averaging if it worth or not, otherwise you will again be in trouble. Always prepare your plan, homework, and then implement it. Just don't invest and sleep. So currently it is trading at 660, 615, I think today, 615. If you want to invest on Tata Motors, it's from 662 to 615 with good quarterly result. Market is good and Tata Motors is going to grow. So if you wish to invest on Tata Motors now, you have to invest maximum 10% of the amount that you have kept separately for Tata Motors. If you are planning to invest 100 rupees now, you just put 10 rupees in Tata Motors now, and then you wait for a dip. because a market always will give you opportunity. Tata Motors is fundamentally strong, but for any other reason, if market falls, if market go through a deep correction, Tata Motors will also fall, Reliance will also fall. All these blue chip and big companies, Nifty 50 companies, because they are Nifty 50, so first fall is on all these shares, so they will fall, and you can buy on dip. You have to put another 10% and wait for the market. If there is another correction, go with another 10% and then keep 50% money with you, and that another 20% you can use when a disaster comes, like any catastrophic um, situation comes, like COVID, or market falls deeply for any reason. Then you can average it. If you are sure that the stock is fundamentally very strong, then it is the right time to spend your money, take advantage of these kinds of corrections. Then your average cost will be, if you start doing that, if Tata Motors is trading at 650 now, your average cost would be 500. If you have utilized all the corrections earlier, your cost would be at least 150 rupees less than the current stock price. So you can make very good profit, but they need patience. Wait for your opportunity. If you are a long-term investor, never invest one time. Invest with 10%, then see correction will come, invest another 10%, then slowly. And if you have invested 30% and if you are getting a 30% return on it immediately, take that profit, get out of that share. There are a lot of other shares are available in the market. Okay, don't just go after one share and waste your time. So this is what is today's subject. Hope you like it. So always monitor your investment regularly and react in time. Thank you for watching. We will come up with another video. Wishing you all success.